Nick, Maroutsos Kapstream has over $1 billion in assets. Nick, as we talked about, it looks like it was a big rally last week, some relief, but George Soros, big investor, saying this is only going to last 1 to 3 months, maybe.
Yeah, I mean, I think that as a result of the EU announcement, risk assets performed exceptionally well and sort of continued their torrid pace. But the markets suffered a bit of a hangover on Friday, and as with any sort of large party that you would embark on, the day after can always be a bit sobering, and that's what you saw. Equity markets gave back some of their gains, only mildly, but the real performer was government debt. So you saw a major flight to quality on the government debt space, which leads us to believe that the EU officials who are sort of patting each other on the back and high-fiving each other on Thursday are definitely a bit jittery. We're certainly not ready to sound the all-clear just yet.
Yeah, so what does that mean then if, in terms of, some would say, relief, they're running into government debt? It looks like they're still searching for safety. That means that it's not all clear just yet, is it?
It's certainly not clear yet. And out of the plan, there were certainly some positives, but there was also some negatives. You know, the positives, on the positive side, we actually saw them address the bank funding issue, which was extremely positive. Also, the fact that they got a plan together at all was certainly positive, given that they had canceled meetings and there was much debate about what the plan was going to incorporate. But on the negative side, what we're seeing is that it's certainly not a comprehensive plan to fix everything. I think what they've done is they've protected the downside tail risks, but the actually crux of the crisis is one of solvency, so any sort of market manipulation is only going to have a lasting effect. The two major questions that we have at Kapstream is, number one, Greece. Is a 50% haircut on debt Greek enough to bring them back to appropriate debt levels? And all the analysis that we read is that that's not the case. A 50% haircut will really only bring them down to about 120% by 2020. Similar along the lines is whether or not they have the political scope to actually implement those plans. The second major question mark is Italy, which has been a hot topic of late, again facing major political issues, and their ability to implement their reforms are certainly questionable.
Oh, sounds like you have some big question marks out there on the markets then, Nick. So how long do you think this rally might last?
Look, I think that the market can continue its rally, but certainly not at the torrid pace that we've seen over the past 2 months. The news out of Europe was definitely positive. A lot of question marks do surround it, but we think that with the upcoming summit, the fact that risk assets can possibly continue their run for at least another month, maybe 2, and then in the new year, people will again start to focus on fundamentals and actual economy globally. If you look at what's happening in the U.S., corporate earnings have been relatively positive. The data out of the U.S. has also been okay. The third quarter GDP number was actually quite good in the sense that it brought GDP back to pre-crisis levels, which is definitely a positive. The only caveat to that is that we lost 8 million jobs in the process. So I think what you're going to see is investors use this time to get defensive, sort of capture a bit of the rally, take some profits, take some chips off the table, and begin the new year quite defensive.
All right. Nick, thanks for sharing your time this morning.